Hi, everyone. Welcome to this week's StashAway market commentary. Together with Freddy, we will be answering questions from our customers. Hi, Freddy. How are you?
Hi, Stephanie. Good to see you again. Great to be on the show. And I can see we have a lot of questions. And but first, I would like to instead ask you a question before then.
Oh,
There's been a bit of a buzz a week or two ago about this newly released Chinese document. It's a policy document about um, law and China's future direction, but it's a very vaguely worded. But I know it's a 5-year horizon thing typically. Can you sort of take us through what it is about and and why the interpretation by the West versus how the Chinese interpret it would be different? So first about what it is, Stephanie.
sure.
Your turn.
Yeah. Thank you. Yeah, this document apparently has gotten quite a lot of attention from the Western media. It's actually a document that's being put out every 5 years. So the plan is I guess, a renewal of the original plan that expired in 2020. In it, the whole document is only in Chinese, so unfortunately, there's no English version of that. But the title of the document, if I just take it literally, is called "Implementation Outline for the Construction of a Government Under the Rule of Law." So this is basically a 23-point or action area, high-level policy framework for the Chinese government to focus on in the next 5 years in various areas to strengthen the rule of law in China. I think the Western media has placed a lot of attention or just kind of focused on the crackdown of private sectors and in particular some tech industries, and sort of make it sound like this is a new document targeted at these specific industries. In fact, it is not. And if I look at like what the Chinese actually reads, or the I guess the focus of the Chinese media, a lot of the focus is actually on President Xi's upcoming election in 2023. So it's interesting to see that there's quite a significant difference as to what emphasis is placed by the West versus in like the China media.
One thing I have realized is, correct me if I'm wrong, Stephanie, it seems like equitable society or wealth distribution, those topics weren't really mentioned in that very important document. Um, but those themes have been central to the crackdown on tech that we've seen so far this year. Is that right? Is that true?
Yeah, I mean it's a very high level document. So they wouldn't specifically say anything, any specific action versus like different, I guess on different industries or even like society. There were 2 points out of the 23 that mentioned some industries, but again, no specific mentions of actions. So I think it's maybe a bit of just kind of media over focused on like those 2 points out of the 23, and it's understandable because like the media needs to sell, right? So uh, we understand there's a lot of questions about the China internet sector, and in particularly KraneShares China Internet ETF. So we've actually arranged for a webinar with KraneShares CEO, and it's going to be held and Freddy as well, and it's going to be held on August 24th, Tuesday, 8 p.m. Singapore, Malaysian, Hong Kong time, and 4 p.m. MENA time. So hopefully everyone can dial in and listen to our discussion and also ask your questions. So maybe with that, let's move on to some of the customer questions. So we have a question from Wood Liao. Wood Liao would like to ask Freddy on his personal opinion about gold. He remembers that you said the 20% gold allocation was used to actually prevent any market crash down. And he's seeing that after re-opt, the optimization, gold allocation in his portfolio has been lowered to 5% only. So, Freddie, can you explain a little bit on our strategy on that, and what is the reason behind that?
Well, first, some context. I think he's mentioning about SRI 36%, which is the highest risk portfolio, because that's the only portfolio after the July reoptimization that ended with 4.5% in gold. Every other portfolio actually has between nearly around 10 to 17.5. So the treatment hasn't changed, except for this portfolio that Wood Liao has pointed out. And the reason specifically to SI36 is that it's the most growth seeking portfolio, right? So it will
Mm,
be the most sensitive to making changes. And two, since the inflation, U.S. inflation momentum came into the picture, the algorithm felt that is sort of good. The more pressing matter for this portfolio is to try to protect returns. And so in that case, it ventured into real estate, that U.S. real estate, because it has recovered a lot, and it's a sector that is will rotate into becoming more like a winner as the vaccine drive in the U.S. accelerate, and they have been accelerating, right? So it is a rotation team that's driving this decision. That's my interpretation for it, and it also goes into other assets, because gold is not the only protective assets in the world. There's still some very high quality bonds that you can seek, even inflation linked bonds, corporate bonds. REITs is one of the ways. So it's very difficult to try to simply describe it when the algorithm is looking at so many dimensions of the problem.
mm,
But our interpretation to you is primarily driven by U.S. inflation momentum, although that would have argued to keep more gold, yeah, has happened for all the other portfolio. But for this portfolio, since it's the most risk-seeking and most return-seeking one, it sort of ventured into other path where it has less gold, but it went to real estate that has the highest potential rotating. It went into some corporate bonds to balance risk. But overall, then it has Australian equities internationally, which is an commodity exporting countries as well. That is a very good double head as inflation protection and also a growth seeking assets as well. So there's a lot of stuff going on to sort of rebalance those things elsewhere. Um, this is our best effort interpretation for you, I'm afraid, but hopefully I'm answering the question, Steph.
Well, I guess that means ERA is actually finding even better assets to invest in rather than just in gold, which is always good for our investors, I think. Let's move on to the next question, maybe from Kenneth O. Kenneth was saying that he was reviewing his portfolio and also noticed that our view on ex-US is actually this inflationary growth, which he correctly points out is low inflation and high growth quadrant, which he supposes is a actually good environment for risky assets in non-US. His question is that he realized that for some of his portfolios, emerging markets in Asia have been removed, and there seems to be less non-US exposure for growth. So, Freddie, can you maybe comment on that and explain to Kenneth what the reoptimization is doing?
First of all, it's hard to know which portfolio he's in, but to answer the question, the Asia ex Japan emerging markets have a lot of overlap, sort of correlation among themselves with China tech as well. They all have a heavy component, and China has a hand in it. And the algorithm is sort of decluttering the concentration risk by sort of taking it down and moving it to places internationally, like Australian equities, for example, that I previously mentioned. An asset that the algorithm thinks would double head as a growth seeker plus an inflation hedge for the US based assets, because they do export commodities, as you know, base metals and materials, and even food prices went up, right? So that's what the algorithm was trying to do.
Mm,
But it's very difficult to answer the question precisely when the exact portfolios were unknown. But that was my generic explanation just now. But elsewhere is there's a lot of dimension where the algorithm try to balance inflation and growth seeking and valuations. And it's very difficult to sort of summarize it here. So my advice for Kenneth is to, if you felt like we didn't answer the question better and well enough for you, please do reach out to our customer support attention to me or Stephanie. We will be more than happy to sort of talk about it in more specifics with you.
Thank you, Freddy. And that's great. Those are the questions for this week. So as usual, we have a number of upcoming webinars that are very, very interesting. So in Singapore, August 26th, Thursday, 1 p.m., we have a interesting seminar called Integrating a Holistic Approach Towards Financial and Mental Wellbeing. In Malaysia, Wednesday, September 1st, 6 p.m., we have an inside look into StashAway. In the MENA region on 25th of August, 6 p.m., we have how to invest with ETFs in the right way. And lastly, in Hong Kong, every Thursday, 1:30 p.m., we have an Ask Me Anything in Cantonese with myself and Marco. So thank you very much, Freddy, and everyone have a great week ahead.
Subscribe to our YouTube channel to get notified whenever we have new content out for you. Also, don't forget to download the StashAway app. It's available in the Apple App Store as well as the Google Play Store. So you can start on your financial journey right now.